Hi, this is Chris Davison, and I want to take you through some of the backtesting we've done on Mousetrap, just to show you the way that Mousetrap works and to give you an idea of how it might perform going forward. Now, Mousetrap is an EA that only runs on the 15-minute Eurodollar chart. It will run on other charts, but this is the one it's been optimized for. And in terms of settings, it's really very simple. You can choose your lot size, either a fixed lot size or a percentage at risk, and you can say, do you want to exclude trading in August or trading on a Friday? And in both of these cases, that's exactly what we're going to do. We're going to exclude those because our testing says that that's the best. So I'm going to press OK, and I'm going to press, we've got the 15-minute chart, we've got the Eurodollar selected. We're testing on data from January 2001 to December 2010, so 10 years worth of data. We haven't done 2011 yet because I don't have a full year of 2011 data. As soon as that's available, I'll do the testing on this. And we're modelling on every single tick, which is the most precise model you can get on MetaTrader. So I'm going to click Start. Now this will take quite a while, so I'm going to pause it until it gets going, and then we'll see what happens. Okay, so what you can see on the screen now is the backtesting going forwards, and if we look at this, what you can see is a longer number of either losing trades or break-even trades followed by a winning trade, and this is very much the profile of Mousetrap. It's what I'm terming a not scalper. So in a scalper you take lots of small wins and then there's a massive loser which would blow up your account. Well, Mousetrap is the opposite. It takes lots of small losers or move to break-evens, and then when there's a move that comes along that it's trying to capture, it lets it run. And with Mousetrap, and we'll see this when we look at the stats at the end, a staggering 85% of your trades are going to be either losers or break-even trades. Only 15% are going to be these larger winning trades. And how this works is over 10 years, the small losers, although there's a lot of them, they're significantly outweighed by the numbers and the amount you won by the large losers. It's really important though, as this goes forward, that you understand that with this EA there are going to be periods where you've got losers. That's exactly the profile of it. The other thing to note with this is it doesn't trade very often. The number of trades are down the bottom, and if we look at this, so trade 110 occurs in October 2001, so 10 months into this. Now this has got some way to go, so I'm going to leave running, and I will pause it and then come back and we'll see how it's getting on. So we're about a third of the way through the testing at the moment. In fact, we've reached, where have we reached? We've reached the end of 2003, beginning of 2004, and if you remember, we started with an account balance of about $10,000, and we're now at an account balance of just under $15,000. Remember, this is back testing. Now you may be thinking, and you'd be right to think, that after 4 years of leaving an EA to run, your balance has gone from 10,000 to 14,000, and that's not very exciting. However, this test is based purely on a fixed 0.1 lot size, and in a few minutes I'm going to rerun this test where you're risking 1% of your account, and I would urge you to stay and watch the end of this video, because although the data is exactly the same and the trades it will take are exactly the same, the difference you can get with an EA or any system when you start reinvesting profits of previous trades is the potential for gain is huge. So let's leave this running until the end of this fixed lot test. We'll have a look at what it's done, we'll have a look at the profile, and then we'll come back and rerun it, risking 1% of your account on each trade. Okay, we're back, and as you can see, it's been about 1,000 trades. After 10 years we have the measly sum of a gain of about $14,000, and there's been a nice straight growth curve. But have a look at this. There's a period of drawdown here between end of April 2007 and where are we? September 2007. where there's been basically a series of almost complete losses. And this is what you're going to get with a system like this. Although the curve goes pretty much straight up and there are some good gains to be had, there are going to be periods where you get losers, where the market isn't doing what this particular system wants. Looking at the figures, as I mentioned before, so profitable trades, only 15.6% of the trades are profitable, the rest are losing trades. But if we look at the size, the average profitable trade was $184 and the average losing trade was 16 to 4. So that's about a 12 to 1 reward to risk ratio. Now all of that doesn't sound very exciting, and after 10 years, if you put in $10,000 and made a profit of $14,000, that's nice, but it's not brilliant. But this time what we're going to do is see what happens if we run this rather than with a flat 0.1 lot size. We're going to run it by risking 1% on every trade. So I'll do exactly the same thing again, and let's see what happens. Now the same thing's happening here. This is exactly the same as we saw, the same trades as we saw at the beginning. But here we've got the lot size that's taking place. So the higher the green bar, the larger the lot size. So now we've got a lot size there of 0.7, and over here we've got a lot size of 0.9. So as the account gets bigger, clearly 1% of the account is a larger amount. Now you'll see it's not linear, it doesn't go up, it goes up and then comes down with the losing trades. And we have the same profile that we had before, a large number of small losers and then a larger winner. And over here the same starting amount, $10,000, but now we can see that after, where are we here, end of November 2001, we're about $16,000. Now remember, this is back testing. This is not the results that you will get if you run this EA. This is just back testing. So let's let this run and we'll see what happens after the 10-year period. Okay, so we are now in, where are we? End of 2004, and the account balance is about 86,000. Remember, this is back testing, and we're about, obviously this is 2004, so we need to get to the end of 2010. What you can see here is lot size is now about 4.4 lots, and it's growing in line with the account growing. It's still only risking 1%, but because the account is larger in this back test, the account size is getting larger, and you'll see this as we go forward. So as you can see, we're now into, where are we? We're now into 2006, and the account size is growing, but we're still getting these periods of drawdown. And with the lot size going up, they will become more and more accentuated, simply because the same number of losers that we were having before is with a larger lot size, so the drawdown is larger. And as the lot size continues to go up, the amount of drawdown as an absolute pounds or dollar terms will be greater, but then the recovery when it comes in this backtesting example more than takes care of the small number of losers. And this is why we get this slightly more exaggerated sawtooth pattern going on. And you can see that back here, when we started over the first couple of years, this looks more or less flat. If you remember back to the start of the backtesting, this was by no means flat. We still had this number of losers, winner, number of losers, winner profile, and this is going to continue. So we're now into the end of 2006, so let's leave it running to the end and see where we get to. Okay, so we've now done the 10 years back testing, and as you can see, there's been some quite interesting growth. And just in case you can't see that number, the backtesting results, and I can't stress that enough, the results of backtesting on 10 years of backtesting data is a net profit of just over $2.5 million. And if we look at the results page, just get rid of that. So that's all the individual transactions, but if we look at the report rather, you can see that we saw exactly the same percentage of profits, profitable trades, only about 15%, because the trades taken were exactly the same. The only difference is, rather than risking 0.1 of a lot, we're now risking 1%. And with this system there can be 2 trades open at any one time. And there is the net profit number. Now this does not mean that you will get the same results going forward. And in fact that brings me on to a really good point, because this is all with backtesting data. So what we did in October was to take this system and run it on a demo account where we're risking virtual money, and the results of that can be seen here. There's the system name. We started this back on the 26th of October, and here are all the individual trades. And as you can see, the vast majority of these trades were losers, as you would expect to see. But here's the results as we're now at the end of December, and what we see is very interesting. We see exactly the same profile as we saw in backtesting. Not exactly the same, but the same type of pattern, where we get a number of losers, a winner, a larger number of losers, and then some winners. And as you can see, we're currently in a run of losers. But if we look at the open trade that was currently out there, there is currently a sell trade on the euro, which is 72 pips in profit. I've no idea how it will finish up. And if we look at that in terms of pips, as well as in terms of actual financial amount, we get exactly the same sort of profile. We see we've had winners, large number of losers, winners, larger number of losers. And that's really it. That's Mousetrap for you. We have a situation where we've got a not scalper. Put this back on the graph. On backtesting it's performed incredibly well, but backtesting is only backtesting. It is not an indication of what will happen going forward. In demo testing it's performed similarly to how it performed in backtesting, albeit over only a few months. We don't know what's going to happen going forward. But that to me is enough to say there is a chance that this EA will work. Based on the backtesting and based on the forward live testing, there seems to be something here which stands a chance of working. The probability is that we will see this going forward. Now how high that probability is I don't know, and I'm not trying to get all wishy-washy about disclaimers and everything, but it's important you understand there are no guarantees in foreign exchange trading, or indeed any trading. But this looks hopeful. I like what I've seen, and certainly from my personal perspective I'm now prepared to put real money behind this and trade it on my live account. In fact, I've been doing that for some time now. So there you are. I'm sure at the end of this video there'll be lots of disclaimers scrolled up, but that's the back testing and forward testing of Mousetrap. Thank you very much for listening. It's been a long video.